Hello everyone and welcome. Last week has been pretty rough. We have Bitcoin falling more than 10%. The same thing for Ethereum. Gold has been trapped in this tight range from the support of 1896 to the resistance of 1948. Lately it is showing some signs of strength, but we have seen this before. It's not the first time for gold to rise. Gold tends to consolidate in tight ranges for a long periods of time. We have this from February 2022 to April 2022. We have this weekly range from March 2021 all the way to January 2022. But when it breaks hard. I mean, just look at that. 10% rise after it's broken this downward trend. Many people think that gold is boring because of this consolidating, but the thing about gold is that it makes surprising moves all of a sudden. I mean, for example, take this candle, this daily candle on the February 2022. From the lows of 1880 to the highs of 1972. That's almost 100 moves in one day. Many stop losses have suffered on this day, definitely. So for gold, if it broke the resistance, we might go higher, but it seems that it's facing some troubles. So as the usual of gold, we might tend to consolidate over here a little bit. As per indices, it is more than clear whether it was on the daily or the 4 hours or the hourly chart. The sentiment is extremely bearish. Next week, we have CPI numbers and JP Morgan earnings. And this one event is very important because it will give us insights about consumers, their spending, have they run out of cash or not. So two big events next week, and let's not forget that the market is trying to price in the 50 points hike and the inversion of yield curve. So indices might continue the downtrend. And has anyone noticed how rough it was to trade indices last week, especially from the 6th to the 8th? Up, indices was like up, down, up, down, up. But Dow was showing some strength. It is holding nicely. Also on the daily we have two green days. I wonder if this bullishness will continue next week. I want to talk about the ride we had since the lows of March until the peak of the same month. How ironic, we had a low and a peak in the same month. I think that this rally was mostly driven by retail buying, especially that after almost 14% fall in the S&P, there wasn't really any sellers left, so retail really took the chance to take this market higher. This came 2 days before Fed meeting, which was bullish since we didn't get the 50 points hike that everyone was anticipating. There was also some rumors that the war might end in May. Institutional money wasn't really buying. until the middle of this rally, but as we came closer to the peak, retail ran out of buying power and institutional money wasn't ready to take this market higher. After that we had the inversion of yield curve, fears over Fed 50 points hike, and that took the market down. From here, I think that the downtrend might continue, so pay attention to CPI numbers and JP Morgan earnings. So the next week will be pretty volatile, especially for Bitcoin and indices. That was it for today. Hope you have a green week ahead. Cheers!